I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. The S&P pushed just a little higher, while the VIX eased meaningfully, and the gates lined up exactly as this morning's outlook anticipated. Welcome to the VixShield Daily Market Summary, the Monday Market Close Recap for April 27th, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. In this episode, we walk through exactly what the tape delivered, why the volatility picture improved, and what that means for the iron condor structures we placed at the bell. The S&P closed at 7,174, a gain of roughly 8 points on the day. That is a quiet extension of Friday's steady finish and keeps the index inside the broad range we discussed in this morning's outlook. We said to watch for contained movement while we waited on fresh macro signals, and that is precisely what we got. The VIX closed at 18.55, down 1.32 or 6.8% from yesterday's 19.5. It now sits 4.5% below its 5-day moving average of 19.03. That decline is bullish for premium selling strategies. The term structure remains in healthy contango. The 3-month VXV sits at 20.83. Leaving a spread of 2.65 points. For those new to the concept, contango simply means near-term volatility. Expectations are lower than longer-term ones. That environment generally favors iron condor traders because time decay works in our favor while the market prices in calm. Cross-market signals painted a mixed but manageable picture. The dollar index slipped 0.11%, supporting modest risk appetite in equities. Bitcoin fell 1.78% and Ethereum 1.74%, a mild divergence from the S&P's small gain. Gold gave back 0.79%, while crude oil rose 3.72% on supply concerns. Taken together, these moves suggest investors are hedging record highs without rushing for the exits. An unexpected retrospective observation from today's session. Despite headlines warning of lost momentum on Wall Street, the S&P managed to close in the upper half of its expected daily range. That quiet strength after a full weekend of digestion tells us the market continues to absorb uncertainty better than many expected. Now let's connect the headlines to the price action. Seeking Alpha noted the curious pattern of spot up and VIX up as investors hedge record highs. That observation lines up with what we saw intraday, light buying in equities paired with selective volatility protection. The result was a modest net decline in the fear gauge, exactly the setup this morning's outlook highlighted as favorable for income structures. Trading News reported the Dow and S&P slipped, while Qualcomm jumped 13% and Domino's Pizza dropped 9%. Those individual earnings moves created rotational noise, but never threatened the broader index, which brings us to the bigger calendar. Investors are clearly positioning ahead of the Federal Reserve interest rate decision and the Dallas Fed Manufacturing Index, two prints that could swing volatility 10 to 15% later this week. BlackRock's weekly commentary and XTB's earnings season recap both emphasize the same theme. Markets are digesting rich valuations, while earnings growth tries to catch up. Investors Business Daily echoed that caution, yet the tape refused to break lower. Taken together, today's headlines told the story of a market that is hedging its optimism without abandoning it. Now let's look beneath the surface at volatility. The VIX finished at 18.55, clearly declining and now well inside the 15 to 20 caution band we monitor so closely. Realized volatility over the last 10 days sits at 11.09%, comfortably below the implied level. That gap continues to support premium collection. The expected daily range gate came in at 1.25%, and the entry bias was entry allowed. The formula was straightforward. VIX below 20 and the expected daily range below 1.5%. Both conditions were satisfied. Here's the interesting thing about what just happened. This morning we told subscribers the three-gate alignment, expected daily range, cleared, VIX under 20, and healthy contango would trigger the iron Condor command. By the close, every gate had turned green. The market spoke, and the signal was placed. VIX at 18.55, elevated but still below 20. Conservative tier is green, safe to place. Balanced is yellow, tradable but size down if you are cautious. Aggressive is yellow, tradable with extra caution. Now, the strategy insight for today. The RSAi engine, our Rapid Skew AI engine, verified the place signal because all entry gates passed and the VIX trend remains favorable for premium selling. This is exactly what the Iron Condor command is built for. A neutral four-leg option setup that profits when the S&P stays inside a defined range. The conservative strikes sit at 7110 over 7115 on the put side and 7220 over 7225 on the call side, for a net credit of 70 cents. The balanced tier uses 7120 over 7125 and 7205 over 7210 for a net credit of $1.15. The aggressive tier lines up at 7130 over 7135 and 7200 over 7205 for a net credit of $1.55. These are RSA verified strikes, cross-checked against live market skew before publication. Remember the educational definitions. The Iron Condor command is the core daily income strategy of the SPX Mastery System, placed in the 15-minute post-close window using expected daily range guided selection. ALVH, our adaptive layered VIX hedge, keeps all three layers active. Short-term spike guard, medium-term wave shield, and long-term endurance hedge. That protection remains on, even though the premium gauge did not trigger full hedge entry today. The theta time shift is in forward mode, extending to 7 days to expiration. This allows us to capture additional vega while we let the position breathe. The temporal theta martingale and temporal vega martingale mechanics stay ready in case we need to roll threatened positions forward in time to harvest volatility expansion rather than fighting it with extra capital. All of this rests on the VIX Hedge Vanguard methodology, the proven layered approach that historically cuts drawdowns by 35 to 40% in turbulent periods at an annual cost of only 1 to 2% of account value. The discipline lesson from today is straightforward. When the gates align, we act. Not before, not after. The market gave us the precise setup this morning's outlook described, and we responded with measured placement between 3:05 and 3:15 p.m. Central Time. Patience is the difference between consistent income and unnecessary friction. Looking ahead, the board we are playing on this week features the Federal Reserve interest rate decision, PCE inflation data, and GDP releases. Those events can move the VIX significantly, so we will watch the overnight action and tomorrow's opening range with care. We need the market to close between 71.10 and 72.25 this week to keep the current Iron Condor structures on track. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VixShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VixShield, your protection against daily uncertainty. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.